Welcome back, everybody. Let's just continue with where we left off, talking about the CDN market, Cloudflare, Akamai, and Fastly, which if you haven't watched that, check out the video. Here's where we left off. I was doing the compare companies feature on the new research dashboard. Sort of left off here with Fastly, flagging it as something of potential interest. And maybe it's of enough interest to you that you could immediately launch into this start thesis feature, which immediately takes you to the investment thesis checklist under company analysis, a new feature that is launching here in just a couple of weeks. But before we get there, I just want to walk you through the next step of our process. As you know, the way we run our methodology here at CSI is after we do this, we like to try to figure out not just who's who within an industry. Fastly competes against much larger Cloudflare and Akamai, but where they actually sit within the industry supply chain. So we have this new feature. This is in order of how we run a research process. So drop down to build custom supply chain. And I created this new custom supply chain, data centers, colocation data centers, which may or may not be different from centralized cloud compute. These colocation data centers, smaller data centers located close to users, are where CDN companies will actually operate their software and their smaller little networks of servers. And then finally, downstream from the CDN companies, actual enterprise software companies and internet companies like e-commerce. This could be a very extensive section of the supply chain. I'm just going to cap it here at enterprise software and e-com, but I'm going to start here on the left and just put in the hyperscalers and a couple of the neoclouds here under add company. I've added these, and then I can just drag these in to this section right here. You could actually just pull up your favorite LLM or just use good old-fashioned Google search or internet search and figure out what CDN companies the hyperscalers use. And if you run through this exercise, you're going to know that the hyperscalers actually have their own built-in CDNs. They all do. Actually, a lot of enterprise software companies do as well. So I'm just going to make a tag here. Let's call it vertical CDN. And the reason for doing this little exercise is you immediately start to understand within a supply chain where there might actually be a competitive advantage. And you'll know by filling this out that a lot of the CDN companies, why is it that they've become commoditized? Why is pricing power difficult? Why has Cloudflare built its success by not just being a CDN, but also early on building in a lot of cybersecurity and software development features? It's because the big guys have actually built their own CDNs and have progressively cut legacy providers like Akamai out of the mix. On the other hand, CoreWeave and Nebius do not operate their own CDN. A lot of companies using this bare metal GPU service, they either don't need a CDN, they either do the training within a CoreWeave or Nebius data center, and then they use some way to transfer that directly to on-prem or into their actual software environment, like on Amazon, AWS, where the actual software that will use the results of the AI trained by the GPUs in CoreWeave or Nebius will actually operate on an ongoing basis. If a company wanted to actually operate their AI from a CoreWeave or Nebius cloud, will actually then need to go pay for a CDN service and hook up the CDN, like let's say Cloudflare, Akamai, or Fastly. So there's an added layer of complexity here. And if you recall, if you watched the DigitalOcean update that we did a couple weeks ago, DigitalOcean is building a GPU-based cloud as well, but they actually have a bit of vertical CDN going on. It would appear these days, it looks like it's their own CDN, but historically they actually use Cloudflare natively. So developers spinning up new software within DigitalOcean don't have to go out and hire their own CDN and buy their own CDN and manage that. Cloudflare comes built in, and it looks like it's kind of a white label relationship now. Eventually, all these data center companies end up competing with the co-located CDN providers here. So you can get fancy with these tags just to kind of help you keep track of who's who. We'll give you the ability to change the color of the tags, but it can help you keep track of where there might be a competitive advantage or where there definitely is not a competitive advantage. Let's just move to software, and let's start with some enterprise software companies. Let's add a few to the list. Let's do Salesforce, ServiceNow, how about SAP? And let's throw in a cybersecurity company for good measure. Let's throw in the largest cyber pure play. We can drop these in. And just a really simple Google search or your favorite LLM, just one additional tab, do a search. What CDN do these companies use? Airbnb, Akamai, Booking Holdings, Akamai, as well as AWS. ServiceNow, it seems, doesn't use anyone. They have their own in-house. SAP, Akamai, Palo Alto, Akamai, and AWS, and Salesforce, Cloudflare. Interesting here. We actually saw Akamai come up quite a bit. Maybe Akamai is worth taking a closer look at, even though the revenue has kind of fallen off. Or maybe this is just indicative of these really big enterprise software companies being pretty well tenured at this point. And so Akamai is just there in the mix. But worth flagging for a little quick look, maybe Akamai's management team is expecting some robust growth. Interesting to see Cloudflare not show up quite as often. We can also add it over here to DigitalOcean. This is a high growth business in Cloudflare, but a potential flag, seeing a lot of competition on both ends of the supply chain, on the software side and the data center side, indicative that Cloudflare really doesn't have that well entrenched of a position in the supply chain. It's not this critical choke point, so to speak, or a moat, to use the couple of cliches. And that would be a flag for Cloudflare. Maybe this run of financial growth, revenue growth over 33% in the last quarterly report, maybe this is why the operating margin has remained low on a GAAP basis. Your free cash flow margin is definitely there and making improvements, but lots of sales expense via stock-based comp to get Cloudflare installed in global internet infrastructure and at enterprise software companies and e-com businesses. This would be an early flag that Cloudflare's revenue growth is only sustainable if it continues spending a lot of money. So maybe this is not exactly one that you would want to allow to be a core position in your portfolio without a lot of the company maturing and figuring out how to better entrench itself in the ecosystem. Akamai, it seems, has gotten itself fairly well entrenched. You see a lot of downstream customers here using Akamai, but we need a financial recovery, as we talked about already. Fastly not showing up, but the revenue has reaccelerated. Maybe this is kind of being treated as a CDN diversifier for some cloud providers, people using the Neoclouds or new software businesses. Maybe they want to use a multi-CDN strategy to help with software delivery resilience. Maybe they can also play these companies off each other to keep costs down. This is kind of the next step we like to do, and in thinking about where we allocate money, and using the little built-in financial tool is going to save us a step. That's why we added this feature. You can click through these companies and see what kind of financial results these companies are able to generate and figure out where is value in this supply chain actually accruing. So who actually holds the advantage here in this particular supply chain that we've just created? It would seem the vertically integrated businesses that have a built-in CDN, as well as lots of their own software at play, and then maybe also downstream. So over the long term, where should we be targeting our portfolio? Infrastructure pure plays, it would seem, just at brief glance from the financials, not accumulating the most profit. It's actually the vertically integrated companies up here, and Neoclouds, still a wild card, and then all the way downstream at the software companies, end markets, companies that actually do something with this infrastructure, and also to a certain extent, maybe integrating some infrastructure of their own in-house to help control their costs. It would appear this is where the most value is accruing right now. Let us know what you think about the new custom supply chain feature. I think we've got a pretty long roadmap of improvements that we can work on with that, but let us know what you think about that, what can make it better, easier to use, easier to understand, and help organize your portfolio around that accordingly.